Today, I'm going to test out this particular strategy.
Literally only use one strategy, and it's helped me make over $1 million so far this year. My strategy is
I'm going to backtest this strategy using real market data, and the results may surprise you. So let's go. Before we dive in, this video is for educational purposes only, and trading involves substantial risk. This is not a recommendation to buy or sell. Today, I'll be sharing with you how I backtest a strategy and how I optimize it to make it perform even better. The strategy that I'm testing is from TJR in YouTube, and he claims that this one particular simple strategy is repeatable and has made him over $1 million. So let's take a look at the rules.
First thing, what are we looking for? We're looking for daily buys. How do we do this? By marking out high time frame draws on liquidity.
He is extremely generous in sharing the specific setup, and there are 4 key things to note. The first key step is to mark up key levels from the session highs and lows. Now, what this means is identify the Asian sessions, London sessions, New York sessions, and mark the highest and lowest prices, the daily time frame, the 4-hour time frame, and the 1-hour time frame. Now, the second portion is to wait for the price to hit this level. When we talk about hitting these levels, it can be very close to the level, like within 0.1 or 0.2%. Number 3 is to look for reversal signals. So you mentioned 3 key reversal signals. Number 1, break of structure. Number 2, inverse fair value gap. And number 3, 79% of the Fibonacci retracement closure. And the good thing is all these are quantifiable, meaning it is easy to do a backtest. Number 4, before entering, we're going to find a continuation pattern. So we wait for at least one of these continuation confirmation. Number 1, order block. Number 2, fair value gap, the price gap in the direction of the new trend. Number 3, equilibrium retest, the price return to the 50 level of the recent move. So now that we've entered the trade, when do we exit? We target for the opposite key levels of the profit. Meaning to say, if we enter short after hitting a session high, we target for the session low. If we enter long after hitting a session low, we target for the session high. I've coded this using Google Colab. If you want a copy of this, please comment below and I'll send you the link. The first thing I'll do is to install all the libraries that I need, as well as the price data. And in this demonstration, I'll be using Nasdaq 100, which is QQQ ETF, as a proxy to backtest. Because in the video that we're sharing, he was using NAS 100 as well. I'll be downloading the data down to the 1-minute resolution because that's what the trading system requires. Okay, it's done. Moving to the next step. In the next block, we'll be identifying the key levels. We'll find the session highs and low for each trading day, for the different time zone, as well as the 1-hour and the 4-hour highs and lows. Let me run this. And we have identified all the key levels for the signal detection. Next, we'll be looking for signal detection, meaning to say price is near the key levels within a certain threshold, followed by a detection of either break of structure, inverse fair value gap, or it reaches the Fibonacci retracement levels. It should be also followed by continuation patterns like order blocks, fair value gaps, or price returning to 50% of the levels. So in the lower time frame, we have found the different signals based on the different pattern setups. Finally, with all the signals, let's do a backtest and see whether this strategy can give us the profits that it's done. And here are the results. Take note, I backtested this from 11th of August to 13th of August. So it's only a 2 days backtest. And in total, it has generated 44 trades with a winning rate of 45.5%. Overall, because the average losses is almost double the average win, and it returned a negative 2.66% returns. So this is the equity curve where we start with $10,000. Initially, there was a win, followed by a series of losses, win back, and there was a series of losses. Again, I want to qualify, this is only a 2 days time frame. And frankly speaking, I'm not sure if I missed out any of the strategy components that he has been using because there's nuances in the trading strategy. I'm going to try to optimize the parameters. There are a few parameters that we can optimize. Number 1, the key level of tolerance, meaning to say how near must the price be at the price level before it signals a potential trade. I'm also going to optimize how far to look back for reversal signals and how far to look back for continuation of the pattern. It is my favorite portion, the risk management portion. I'm going to add stop loss, take profit, and also implement a minimum risk to reward ratio. For the filtering parameters as mentioned, I'm also going to optimize them and see whether by tweaking them, it may become a profitable trade. I'm also going to test the different time frame and sessions allowed, Asia, London, New York. See what happens if I filter off some of the times. Let's run this optimization block. This is going to take some time because there's a lot of different combinations to test out. I finished running the optimization block. Based on the optimized parameters, we have generated 27 trades instead of 44. And we have a win rate of 56.5%. Profit factor is 3.9. Total returns is 7.48 and a CAGR of 199. Do take note, I've not added in things like fees and slippages. But based on the average win and average loss, I think there's margin enough to account for all this and still be profitable. Let's take a look at the equity curve. Shows we start with $10,000 and end up with almost near 10.8, 10.725. Here's a comparison of the strategy configuration before optimization and after optimization. We optimized the key level tolerance, the reversal look back, the continuation look back, and one game changer that we added was the minimum risk to reward ratio before entering a trade. The minimum risk to reward we are looking for is 2.5:1. Only the London and New York sessions can optimize this particular trade. We also limited the maximum number of trades to 2. Overall, before optimization, total returns is minus 2.66. After optimization is positive 7.48. We can see all the performance metrics have improved after optimization, and the Sharpe ratio has gone from a negative to 10.09. I would like to emphasize that this is a very quick optimization based on a very short time frame. To make it more robust, we should test it on different time frame and use different data set to see whether this particular strategy can work on different market conditions. Let me know if there are other strategies you want me to backtest and optimize, and I do hope that you have enjoyed this video. If you do subscribe, give me a like and also comment below on what other things you would like me to test. I'll see you in the next video.